Hello everyone, Jesse Webb, TradersPro. Market conditions remaining bullish in a bull market. Still that overall nice uptrend intact, certainly towards the upper end of that range, but that's been the overall discussion now for the last really 2 weeks. And continuing this momentum in the shorter term, this downturn, and then we're starting to move back up again. So building additional momentum now in that long-term trend, which could be significant here, considering that the S&P 500 is starting to break out above some of these recent highs and hold that level. Let's look at some of the other shorter-term indicators. We know that sentiment, breadth, and momentum all are very positive right here. Those are the 3 indicator lines on this chart. And watching to see the setup, when we start to see this, we start to see a divergence between momentum and breadth. Let's see if momentum can start to spike and we start to see breadth start to tick down just a little bit, and possibly some of this sentiment start to move down a little bit. Those would start to be some indications that we could at least retrace or pause. Otherwise, these are very extreme, but the momentum to that direction has just been proven to be very solid right here, but it doesn't last forever. So these are the areas that we have to start to be aware of, because it feels fantastic, and it doesn't typically feel like that in the stock market for very long. Okay, so let's momentum. We've moved back. Momentum had moved. It really hadn't gotten that extreme, but it had moved to this upper spike right here, and then it's moving lower and starting to move higher. So you can see some potential price divergence between momentum. If we can continue to rally out of this breakout and get momentum back up a little bit, that'll set up a little bit better for some downside, but it doesn't have to, because we are pretty extreme at these levels. Breadth also to the upside in this upper range. Sentiment certainly in that upper range as well. So starting to get extreme across the board. Buy-sell ratio, same story. We're very wide, at least as wide as we have been within this last year, minus the move back here in January of last year. Was a little bit deeper, but we still had this length of time here in this buy zone. Now we've got this length of time here in this buy zone. That just means that this green line is above red. That just means the number of stocks in the database that we track is bullish to the upside. There's 2,600 stocks in buy or uptrends, and there's 824 in downtrends. Versus a pattern like this, you can see it's almost the opposite: 3,000 in sell or downtrends, 400 in uptrends. When that starts to get too wide, then we get a supply-demand imbalance, and it starts to shift again. So you can see now we're just extreme. We're at 3.2 and starting to move down from these levels. So we're seeing buy-sell ratio moving lower as S&P at least is moving higher. And again, starting to get some divergence. That's significant at these points, these areas to be focusing on right now. Let's take a look at S&P 500 chart, because we do have this upper range breaking out here. You can see this just as holding this low. On the 1-year time frame, we're at new highs for the last year. I don't think we're there yet for this all-time high that we had back here on S&P 500 is about 480. So if we're going to attempt a shot at the all-time highs, we've got this much space now. And you can see back here, this is a major support resistance location here as well. So we're flirting with that. We're playing with that. If we can hold that and stay above it, maybe even bounce around a little bit, we'll see what it does right here. But this is a pretty major area to be watching. If we retrace, or if we can stay above that, it could be a clear shot to 480 on S&P 500. But it just doesn't, based on these indicators, it doesn't last that long. The amount of time that would take, that might take another week or 2 or 3 or maybe a month for that to get there without some kind of a counter trend base to help it springboard. It's going to be tough for it to do it, but stranger things have happened, right? So we certainly need to be aware of where we're at in the trend, but also the fact that there is now some FOMO here, some fear of missing out and jumping into this overall trend. Again, it's still that direction. That is our bias. That's the overall trend direction. We just are at the extreme of that across other indicators. Not the momentum indicator here on SPY. It has some room to run. So we'll see what the market decides to do over this next few days and weeks. Indexes, if we look at the market scan index buy-sell ratios, we've got just real solid buy-sell ratios again, and they're continuing to do that because we are at the upper end of this range. Sector scans, if we looked at that, see if we have anything cracking. We don't, other than energy, which has been the same story now for the last 2 weeks, 3 weeks, where we've got energy prices. This is the energy share, IYE. It's an ETF. You can see it's in this solid downtrend. We've talked about this. This will continue to be a focal point over the updates in the next little bit, but major support area with all of this price activity back here, oil or energy. In fact, let's look at oil itself. It's a little bit better indicator just to focus on it. It's the oil price itself. This is USO, which is the ETF for crude oil. So if you want to own something that it reflects or tracks the price of oil, USO is the ETF to follow. But again, bouncing some support. We're going to be inside of this range more than likely and retesting. So once we break down this low, which we have, and now we're counter trending back up to retest this area of price, 67.61 on USO. It'll either retest that and continue this downward move, but this range is more than likely the range-bound area for oil, at least for the shorter term price activity. That could, oil stocks could start to sell off. They might also be creating a solid base, but we have this opposite thing happen where oil is clear down here. SPY is way up here. So are we going to get some kind of a shift in that? It doesn't necessarily mean one has to happen or there's any type of coincidence between these two, but it's an interesting price pattern nonetheless. Let's take a look at bonds, which has been a discussion point now for months, years, and we're seeing TLT, which is the 20-year long bond ETF. You can see it's also running into this 50% resistance range, pulling back. It's also range bound 92. So keep an eye on these two pivot points, 92.78 for support off of TLT. That's going to be a buy the dip scenario where it pulls back. If it pulls back any more and retests that area, now it's the next attempt is going to be at that 95 again, that stair-stepping process of breaking up above it and support. So it gives you a little idea of what to look for on bonds moving forward. If that's oftentimes just helping with the overall perspective. If bonds start to pull back, and interest rates go up and oil starts to move back up, will equities start to pull back down again? Some possibilities there, but markets are looking forward quite a ways and really finding, in terms of the market perspective, some good things out there. So we'll see if that continues to happen. Muscle stocks group, we've got quite a few stocks that are bouncing here in this electronics industry, computer and tech, electronics, CAMT, really nice pattern. It's had a real big run this year, had some time to consolidate, pulled back into the buy zone, or I should say has moved back up into that buy zone and already in the momentum location. It's had a big run, big volume on the day yesterday. Could see some continuation on that stock as well. CLS, which was another electronic manufacturing stock, very similar pattern, very similar setup, and also showing some fundamentals here on CLS. And the last one that we'll take a look at here is Shopify, which had a big run, pulling back at least to this support range and looking like it wants to have some continuation here as well. That'll do it for today's update. If you don't have full access to the software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.